Well, fine. Good afternoon, everybody. Ron Wheeler here. Welcome to our webinar. It's going to be great. I think you're going to love it. I'm going to share some great income trading secrets with you. So I hope you're excited to be here as well. Now, the official presentation does not start for another 3 or 4 minutes or so, but I always like to start everything a little bit early just to make sure all of the audio is working and all that great stuff. So if you can hear my voice and like it says on the screen, type yes if you can hear me and see my screen. It should say on air if you could see that. Just give me a real quick shout out in the chat window. That way I know that everything is working. All right, looks like the early returns are favorable. Good deal. I see Dennis and Perry and John and Dan and Bernard. Okay, cool. William, they're all flying in now. Good deal. So it looks like the early returns are positive, and you can see my screen and hear my voice. Excellent. And Rudolph and Will and Rick. All right, good deal. So we're going to get started, and like I said, in about 3 minutes or so. But before we get started, just a couple of questions I always like to ask. What time is it by you? I'm just wondering where you are viewing this from. I am in Ohio. We just had a nice rainstorm here. It's kind of nice, cooled it off a little bit. But just curious, I always like to see where people are joining me from. It's nice being able to sit here in my home office in Ohio and broadcast this out to all over the world. It makes it much nicer for me. I don't have to get on an airplane and travel anymore. Traveling is fun, but it gets on your nerves after a while. I used to travel like 250 days a year, and it's like when I was young and I've never been anywhere, it was so exciting. But then as you get older, and it's like, all right, I have to teach a class at noon on Saturday. Is there a flight that'll get me there at 11? And can I leave at 3? Gets old after a while. All right. Oh, well, quite a few folks. London, Ontario, Northern California. I like it. Flower Branch, Georgia, Ontario. A couple of you out west, Dan and Toby. Uh, Markham, Ontario. Awesome. A lot of folks from Canada. Looks like Minnesota as well. 5 p.m. for Bob, 2, Jerry, 4, 4:58, Indiana. Oh, quite a few people from Ontario. Long Island, New York. Love it. Minnesota, Toronto. Awesome. So it looks like mostly North America. There's a couple of outliers there. And then just kind of wondering, what do you do? Are you retired? Do you still work? I always like to get an idea of of whom I should say I'm working with. Um, I originally the things you're going to see today. I've been trading this now for approximately 15 years, probably a little bit longer than that, but I always do everything in approximate because it's like I never write down the date. But I've been trading like this now for about 15 years. And when I came to VectorVest, I was tasked with creating a trading strategy using options, which was fine because I trade options, that would work for retirees. Something where you don't have to sit in front of your screen for 8 hours a day, something that's risk adverse. And this is what I came up with. It's been very successful. We've been doing this now for 8 years. But I've also come to find out over the years that, pretty much everybody likes to get additional income every month. But I don't know, like I said, just kind of curious. I see lots of retired. Steve, still working. Toby, retired. Renee, Dennis, Rick. I'm not reading everybody's name. I don't have that kind of, I can't read them all, but retired. David, working towards retirement. Oh, Bob, 75 years old, working 3 jobs and loving it. Nothing wrong with that. I'm 48 years old, so I'm not exactly super old, but my mother she'll be 75 this year and she still works. And I'm like, Mom, why do you work? You know, you don't need to. She's like, I know, but I also don't want to just like sit at home and deteriorate. You know, my doctor's like that. My primary care doctor's like 76 years old. And I asked him, are you going to retire? It's going to be a sad day for me. He's like, nope, I'll be working till, I'm in the grave. He's like, it's the way I am. I don't want to idle time. Ain't nothing wrong with it. It's a beautiful thing. I mean, the key is doing what you love. That's the key. Anyway, off my soapbox. It's 5 o'clock, so let's go ahead and get started with today's webinar. So the webinar is called How to Generate 3% per month on average with one option trade per week. And I'm going to be showing you the system I developed here at VectorVest. It's going to help you generate income in any type of market. And the information I'm going to share with you, it's not only changed my life, I've seen it change the lives of so many people. So I hope you're excited about it as well. You're going to see how you can begin making a paycheck averaging 3% per month or more. Now, keep in mind, you can do it regardless of market direction. Up, down, doesn't make a difference. Little to no prior experience because I can teach you from scratch. Safer than simply buying or selling stocks. And it's something you can implement quickly. It's a mechanical approach, yes or no type questions. Now, I know it might sound too good to be true, but you might be thinking, hey, is this legit? You want some proof. And I would too if I were you, because, I see those annoying things on like Facebook and TikTok and all that crap where it's like, oh, I'm the best trader in the world. I'm 19 years old and I just bought this house and I got this jet. It's like, it's all fake. It's all BS, right? I'm not like that. I want to show you the real results and let them stand for themselves and let you decide. So I trade a $100,000 account with my clients. I run a coaching service here at VectorVest, and I've been doing this now for 9 years. In 7 out of the 9 years, I've hit my goal of averaging 3% per month. 2023 was no different. 37.2% total profits. My win rate, I think that's kind of low, but I'm happy with 59%. Average winning trade $1,000, average losing trade $1,000. So not bad. Out of the 12 months, I had 8 winning months and 4 losing months. You're never going to make money every month. You're going to have some drawdown here and there. So we finished out the year pretty darn good, averaging about 3.1%. Now, this year so far, and I don't have April, May, and June, but I can tell you I gained I'm doing my preliminary results. My tracking software had an error in it, and they had to fix it at the server side. I will tell you that April, May, and June, I gained about 3%. So, a little bit not too bad. I'm up about 14% so far for the year. July is closing. July is going to be some drawdown. So I'm going to have a little bit of drawdown, but I'm about halfway to my goal, a little bit behind. But if I can get 3% per month for the year of 2024, even if I only get 2.5%, I'll still be pretty happy. And the big thing here is my average winning trade is 887 and my average loser is 755. So you're not seeing me take these gigantic, ugly losses. It's not part of the system. It's why we encourage this for the retiree. Now, again, I've been teaching this technique to students since 2016 here at VectorVest, and one of my recent students sent me this email back in December. He said, hey, Ron, just want to thank you and your team for the SPX paycheck course in September. I've been using the method tracking my performance. Thought you'd like to see the results. I earned my first 35 Delta trade on September 21st, 23 with only 5,000 in my margin account. Now, less than 3 months later, I'm already up 24.9%. Thanks again. I'll be teaching this method to my retired in-laws to help them grow their income in retirement. I love to hear it. And there's a lesson in there for you too. You don't need to dedicate 100 grand to this. You can start small like Carrie did, 5 grand, but it builds up quickly. If you started with 5 grand, you average 3% per month, compounded over 15 years, it puts you over $1 million. If you start with 25, you'd be near $1 million after 10 years with compounding returns. You're looking at some serious money. Now, clearly, if you have more than $5,000 or $25,000, you're going to get there much, much faster. Now, some of my clients were kind enough to share their photo and their results today, and we're going to talk about a few of them. These are real people just like you. So as I teach the system today and share their stories, I want you to pay close attention because you might find you're in a similar position now as they were when they started. Again, my name is Ron Wheeler. I'm the option trading manager here at VectorVest. I've been trading now for 27 years. And like a lot of traders, when I first started, I had mostly losses. And the reason I was losing is because I was trading in a way that required me to be right to make money. So if I bought something, it had to go up. If it didn't, I lost. If I sold short something, it had to go down. If it didn't, I lost, right? Once you get past that, then you got to manage your money. You can't have too many trades that are losers that are losing too much money. Then you got to match the winning trades. It's back and forth as an investor. Well, I was never an options guy. I was really more of a commodity futures person. I did a lot of day trading and swing trading. Well, I started trading options a little bit, had a rough go of it, gave it up because I had been trading finally successful with the commodity futures for a while then. But we had some clients, and one client in particular was a hedge fund manager from the Midwest. And he was a good client of ours, and he was in the area, and he's like, hey, Ron, I'm gonna come in and just kind of meet all you guys. I've been talking on the phone for years. Just want to, while I'm in the area, I want to stop by in the office and meet. We'd love that. Well, he knew that I wasn't really an options guy, but he wanted to talk to me about options. He's like, let me show you what I do. So long story short, he showed me kind of the inside secret, the institutional way of being an options trader. And he showed me how I could put trades together. If I thought something was going to go up, I could put together an options trade to make it where if it didn't go up, I could still make money. I didn't have to be right to make profits. And because I knew the risk up front and the risk was locked in, I could control my risk much more effectively. He showed me how to use options in a way that controlled risk and stacked probability even more in my favor. Think of the pressure that takes off you. Now, after that, I had started to dabble a little bit more in trading options, but the way that he taught me. So, in today's webinar, I'm going to take you on a journey similar to that. I'm going to show you ultimately the exact system I use to generate those types of returns. I'm going to show you case studies, examples of our clients who are doing this. I'm going to show you our system so that if you learn and follow the strategies, you can do the exact same thing. And then if you stay with me to the end, I put together a little checklist to help you plan out your trade. Okay. I'll put it right in the handout section of the GoToWebinar. It's a PDF. We'll drop it in there. You can click it out and print it. Just remind me when we get to the Q&A because most of the times I forget after talking for about an hour. Now, why is this such an important topic, this whole income idea? Well, without an income system, it's on you, and that creates a number of problems for us. If you're not retired, it keeps us stuck in a situation where we have to work in order to live. Whether you got a lot of money or no money at all, concerns about finance are one of the leading causes of stress. Worrying about whether you'll have enough or if you're going to run out of money, that can have a big impact on your life, your health, even your relationship. If you're already retired, you might be watching your savings get depleted faster than you could fill it, especially with how inflation's been the last couple of years. If things don't improve, you may have that fear you'll continue to have losses that draw on your account. You might even fear you'll have to give up on investing and go back to work. Worst case scenario, you'll run out of money during retirement. But with a system that helps you generate income, things are a lot different. I believe that this is probably the most important point of the webinar. So pay attention and write down what I'm about to say. In order to be financially free, your main need is income. To be financially free, all you need to do is learn to generate enough income from your investments to cover your expenses and lifestyle needs. So I'll say it again. In order to become financially free, you need to learn to generate enough income from your investments to cover your expenses and lifestyle needs. Now, whether you're still working or retired, the ability to generate income from your investments is one of the most empowering skill sets you can have. Because when you have the ability to generate income from your investments, your life will change. If you're still working, you can increase your earning capacity. It's like having a second job. If you're retired, you can have a consistent source of income as if you quit your job, but they kept paying you. It's like a tap you can turn on whenever you want. That allows you to do the things you want to do now and when you retire. When you got a system to help you generate income, it can help you retire even younger. So as I said, I believe this is one of the most important points of the presentation, so I'll say it one more time. When the income from our investments exceeds our living expenses, we become financially free or have the ability to retire. For example, Brian is a client of ours who's a great example of how easy you can become proficient at drawing an income from the market, even if you don't want to invest a lot to begin with. Now, Brian had some health problems and he needed a way to supplement his income. By using the options paycheck system, he was able to generate $23,000 profit starting with just $6,000. He had 100% winning trades in 10 months, 31 of 31 winning trades using our most basic system. And the key point here is this is not beginner's luck. It's a result of following the system. It's the system that helped him get those 100% winning trades and create that $23,000 in profit starting with just $6,000 to start. Now, the first thing you need to know to take control of your returns, it's a bit of a strategic mindset shift. You're either going to continue being the gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Being an option seller is the way you can make consistent income each month. It's what allows you to win even if you're wrong. Now, the reason why you want to be the casino or the house is that, well, number one, the house always wins. Number two, the house always wins because they control and they stack probability in its favor. And our options paycheck system is built around you stacking the odds massively in your favor. So make a note of this. In order to control your returns and results, you need to know how to stack probability in your favor. So the obvious question is, well, how do we do it? The first step is that shift from being the buyer of options to being the seller. So let me explain. Bruce is a great example of that shift from gambling on stocks to being the casino and controlling and stacking probability in his favor. He said prior to working with us, he had mainly taken stock tips from his broker. He focused on our SPX index system, which is our most basic trading system. He says he's not the most technical person in the world. But in the time he's been working with us, He's grown his trading account from $100,000 to $497,000 in 3.5 years. He's achieving a 74% win percentage simply by following the rules of the options paycheck system. And the whole thing takes him around 15 minutes a day. So let me show you how this works. Here's an example of a typical trade you've been taught to make. You find a stock you like, you think it'll go up, so either buy shares of it or you buy a call. Now, why do you buy a call option? Well, mainly when you started learning options, it's what you were taught to do. But what ends up happening a lot of times? Either the stock doesn't go up or it doesn't go up enough, and that call you bought ends up expiring worthless. Has that ever happened to you? Yes? Well, what's the problem that's causing you to lose? Most people feel the problem is they picked the wrong stock. Maybe they picked the wrong strike price and maybe even the wrong expiration. But let's talk about the real problem. If you've been losing money or had more losers than winners with other systems, it's not your fault. That's because most of the systems on the planet teach you to be on the wrong side of the trade. You're taught to buy an option. But as a buyer, the probabilities are not on your side. And for most people, they end up buying and losing and buying and losing and buying and losing. Our options paycheck system teaches you a new way of thinking. You need to be a seller and not a buyer. It's how you get ahead of everyone else. This is how we put probability on our sides, how we can win even if we're wrong. So let's take a closer look at selling options. As a buyer, a typical trade gives you a 50-50 chance to be a winner because when you buy, the only way you make money is if the stock moves in your direction. So instead of having a buyer's mentality, we're going to have a seller's mentality. Instead of hoping a stock goes up, as a seller, you're going to strategically set up your trade using probability. Probability will tell you where the stock is not likely to go. So instead of needing the stock just to go in your direction, you can pick a price which basically says, as long as it stays up here and it doesn't go down to there, I can make money. Now, think of what this does. You can pick a price below the stock, and as long as the stock goes up, you make money. But now, if it goes sideways, you can also make money. The stock can even come down a little, and you can make money. Right from the very start, probability is in your favor. And you can even increase that probability even more. You simply choose a lower price. In this case, the stock's at 204. Now we're choosing 190. As long as the stock stays above 190, we have the chance of winning. We start a lot of our trades off with a 70% chance of success, and you can only do this as an option seller. As a seller, you're putting the probability of success in your favor, and this is the definition of an income trade. An income trade is one where you can make money even if you are wrong on direction. Now, Bruce, he continues to trade with me every week. In fact, he posted in our private group and said, hey, another day of trading on the beach. Got my eyes on AMC and a cold beer. Life's good. Thank you, VectorVest and Ron, for giving us the tools to do what we do from anywhere. That's a great picture right there of being financially free. Now, Mike, he was someone who dabbled with options, but said he lost on each of his trades. Have you ever been there? Can you imagine how frustrating that must be to lose on each trade? Eventually, he just gave it up. He tried to learn more about options, but never felt comfortable he knew what he was doing. He said he didn't have any set criteria. So Mike and I worked together. I taught him the options paycheck system of being an option seller, and he said he immediately became an income machine. In fact, after he learned the system, he went out and said he had 17 out of 19 winning trades with a profit of over $12,000 in 4 months. Now, the key lesson here is that switch from buyer or gambler to seller or the house is what turned his situation around. It's the system. He was so proud of his success, he even sent me a spreadsheet of his trades. Here's his results. First off, notice the number of winners in the profit column compared to the losers. It's pretty good. Notice the length of trades. 7, couple letter 2, 7, 10, 7, some 3s, some 2s, some 4s. The bottom line here is he's pulling in about $1,000 every 7 to 10 days. The average trade that we do is about 7 to 10 days. If you're like Mike and a lot of our students, you can start by trading the SPX. That's the index that tracks the S&P, and that involves only one trade per week and has averaged over 4% compounded returns since 2016. The odds are stacked in your favor on these trades. You're not looking for one big home run trade to become a millionaire. You're growing your account steadily each year. And that's the key takeaway. Home runs might look good, but singles are what win the games. These singles are what are going to enable you to never run out of money and to be able to do the things that you want to do. So now that you've seen by flipping from buyer to seller, you can stack the odds significantly in your favor. I'm going to start stacking the odds even more in your favor by capitalizing on the three most common buyers or gamblers' mistakes. Mistake number one is that buyers choose unrealistic strikes. They choose strikes that are so far away the stock has no chance of hitting it. Let me show you. Here's a stock. Let's say someone's bullish on the stock. A mistake that they make is they buy calls way above the current stock price. Now, why do they buy these options if the stock has very little chance of going that high? Well, they do it because they're cheap options. Most buyers treat options like lottery tickets, and most of the time they lose. They're like the gamblers. Now, since there's always going to be buyers out there who buy those options, you may as well be the one who sells it to them. You're selling an option that has a low probability of being hit. And since it has a low probability of getting hit, that means you have a high probability of winning. And the same goes for puts. There's people out there who buy puts way below the market price, either as lottery tickets or cheap insurance. It doesn't really matter why they're doing it. The fact is, there's always going to be buyers out there who buy these options. And since there's always going to be buyers out there who buy these options, you may as well be the one who sells it to them. Selling these options gives you a 60 to 90% chance of success right from the very start of the trade. Now, the second mistake that buyers make is they choose options that have expirations way too close to the current date. It's like when you go to the grocery store and you see a piece of steak on the discount rack, it's cheap, but unless you cook it in the next day, it's going to be worthless and rotten. You have to throw it away. And the same is true now for options. Here you see what happens to the price of an option in relation to the number of days to expiration. Notice it took over 180 days. Or I'm sorry, over that 180 days, it took 135 days to lose half of the option's value. In that last 45 days or so right here, that's where the option really loses its value. Now, a lot of buyers, they buy their options with less than 45 days. Well, why do they do it if it's going to lose value like this? Again, it goes back to the whole lottery mentality, right? It's cheap. But by doing this and buying those options there, it's going to stack probability against you. So instead of buying options in that final 45-day window, we are going to be selling options in that window. Specifically, we're going to be selling in a 21 to 45-day window. That's the sweet spot. Now let me show this to you another way. This is a graph of Home Depot. Most buyers will buy an option with, okay, let's say a month and a half away. However, that expiration is too close. Notice again how the value of that option drops just because it's getting closer to expiration. That's bad for the option buyer. But you're going to be the option seller now. You're going to let that time decay work in your favor. Remember this. There's always going to be people out there buying options that have expiration dates too close. You may as well be the one who sells it to them. Let them be the gambler. You be the casino because you're going to win more in the end than they are. Now, the third mistake that buyers make is they simply just pay too much. They buy what's called an overpriced option. So let me show you what I'm talking about here. And pay attention to this one. A lot of people don't recognize this. Here's two stocks. The two stocks are very similar in price, 76.24, 76.36. They're within 12 cents of each other. But even though they're within 12 cents of each other, check out the difference in option premium. Option on the left is going to cost you $910. The option on the right is going to cost you $1.80. Why do they have such different option prices? Well, the option on the left had very high volatility, and that leads to the option being extremely overpriced. Buyers who buy these options are paying too much. Well, what's the big deal? Watch what happens when a buyer buys an option that is overpriced like the one on the left. Both stocks go up about $8 per share, from $76 to $84. Now let's see what happens to the value of the options. Even though both stocks rose, the overpriced option on the left actually lost. I want you to think about that. The option buyer got the direction right and still lost. Now, why did he lose? Because the person who bought options of stock number one didn't pay attention to volatility. They lost money. Whereas over on the right hand side with low volatility, you would have had like a 400% return. Now, these overpriced options create a huge advantage to me. Instead of buying those, I'm going to be the seller. Think about that. As an option seller, we could be wrong on direction. And the more overpriced the option is, the more probability we can bake into the trade. And the more expensive the option or overpriced the premium is, the least amount of money we have to risk, which is even better. We're controlling our risk even better. It's a beautiful thing. Now, Bob is one of the most interesting stories I've seen. He said prior to working with us, he was making a bunch of the mistakes that we talk about. He said it cost him dearly. In fact, he ended up either broke or bankrupt 3 times. In his own words, came close to living under a bridge. The options paycheck system helped Bob turn his situation around as little as 4 months. He learned to turn these mistake liabilities into strategies that helped him control and stack probability in his favor. In 4 months, Bob grew his account by 71% and achieved a 79% winning trade percentage. Remember, in order to control your returns and results, you have to know how to control and stack probability in your favor. Well, let me ask you guys, type in the chat, have any of you ever made those buyer's mistakes? Just type a yes or no into the chat while I unzoom this screen that I just accidentally zoomed in. All right, let me fix this real quick. There we go. I screwed up my screen for a second there. The beauty of a live presentation, right? Yep, I see yes, 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 all 3. You know, I mentioned earlier that I was not a huge fan of options. This is why I wasn't a huge fan of options. The bottom line is we've all made these mistakes that have traded options before. It's not your fault. It's not my fault. We were simply just not taught how to do it right, or we were taught a very broken system to begin with. Now, hopefully at this point, you're starting to see the benefits of being an option seller. You're starting to get a little bit interested here. Now, I wanted to learn how to look at and trade with very little risk because, you know, for people that have been around this and they hear, oh my gosh, option selling, they think it's extremely risky. However, the options paycheck system uses a very low risk strategy for selling options. This is why it's a core strategy that we actually teach our retirees. Now, why is reducing risk as an option seller so important? Because most people who don't use the options paycheck system, they're not preserving their capital. They have one bad trade that wipes out all the gains from a bunch of winners. And when you suffer those large losses, it's hard. It takes a long time to recover. But when you do it right with the right system in place, you're going to have a built-in protection plan. You're going to take care of risk management before you even open the trade. You're not going to take a trade like that because you're going to know ahead of time if the trade goes against you, and you can lose a trade like that. It's all known up front. There's no way that can happen to you. Now, when you can confidently select stocks and set up your trades in a way that reduces risk, it allows you to preserve and grow your capital. Like I said earlier, home runs look good, but those singles are what wins the game. Now, one of the most common questions I get is, can I trade it in an IRA? A client of ours, John, grew his IRA over 112% in 1 year using the options paycheck system. He said he had tried and struggled with trading for some time before working with us. He learned to follow the system and turned his inconsistent results into predictable monthly income. He said in 12 months, he enjoyed 85% winning trades and more than double the size of his IRA while spending no more than 15 minutes per day in his trading. So the options paycheck system makes sure you reduce your risk before you even open the trade. First, we choose stocks that are low risk. We have a very specific criteria, but in general, if we're bullish, we start by focusing on good stocks that are already rising in price. Very similar to what you see here. Then, instead of selling naked, we're going to sell with protection. So let me show you how to do this. Now, a traditional option selling system leaves you with all of this risk down here. The option paycheck system is going to shrink your risk to this. So let me explain how this works. This is a graph of a typical stock we'd be bullish on. It's a beautiful graph. It's understandable that you want to be bullish on a stock that looks like this. Now, traditionally, people would go out and buy the stock here, right? It's what the price is. Maybe they even buy a call and they use the current stock price as a match for their strike price. But you're not the buyer anymore, you're the seller. Here's what you're going to do. You're going to go underneath the stock price if you think a stock is going to go up, and you are going to sell a put. Now, when you sell the put, you are going to receive a premium. You're going to get paid. In this example, $200 per option contract. So if you sold 10 contracts, you get paid $2,000. Now that's great, right? But you now have no downside protection in case the stock drops. So for those of you that are kind of unfamiliar with this, let me give you a little nickel tour here of how option selling works. Option selling, it's not like if you sell an option, it's not like, you sell your dining room set on Facebook Marketplace, right? The person comes, picks it up, they give you the money, they're off, it's their dining set. You never have to worry about that dining room set ever again. When you sell an option, specifically a put, what's going to happen is you're selling somebody an obligation. You are now saying, by selling this 135 put, you are willing, if needed or if wanted to, you are willing to buy the stock at $135 a share. Now, if the next day the stock opens up at $100 because of some weird news or something out there, you may be forced to buy the stock at $135. Uh-oh, the stock's trading at 100. You got some problems. One bad apple spoiled a bunch of your good apples. Okay? That's not good. Number one, we're going to prevent that in a couple different ways. But the first thing we're going to do to prevent that is we are going to limit your risk by using a built-in protection plan. While you sell the put, you are going to simultaneously buy a put as insurance. Now, in this example, it does cost you something. Insurance policies cost you money, right? When I sold the option, I was paid $200. I'm going to take 100 of that in this case and buy my insurance. Okay? Now, what that does is it locks you in to no more than a $5 loss. So if tomorrow the stock opens up at $100, yes, you may be forced to buy it at 135, but that option you bought at 130 now gives you the right to sell it to somebody else for 130. Okay? You've locked in your risk. Now, that story that I just told you about, okay, you might have to buy the stock at 135, you might have to sell it at 130, that to me is theoretical. It's not theoretical because it's actually what you can do. I say it's theoretical because in over 15 years of doing this, it's never happened. I've never had to do it. Never had to do it. Because number one, a lot of people get this impression that, if the stock goes below 135, I'm immediately going to have to buy the stock. Not true at all. Not true at all. Second, this trade has now also become your stop. Let me explain. What this transaction has done, and again, if you take 10 contracts on this, remember, you get paid $100. Let's say you did 10 contracts, you get paid $1,000. Now, here's what we're going to do to manage this trade. If the trade goes up, you sold that position, okay, for $1,000. Now remember, you sold it, you got paid, but you're holding a contract, okay? That contract, that promise, doesn't mean you just like Facebook Marketplace and walk away and pocket your money. You have a contract. If the stock stays above 135, that contract expires with no value. You get to keep the entire $1,000 at the end of expiration. We don't necessarily do that, okay? But that's what happens. As the stock goes up, that contract that you sold becomes worth less and less and less. Now, what you can do is you can go out to the option marketplace and trade that option with somebody else. Hey, I've got this option trade. I sold it for $1,000, but now it's worth 500 at the fair market price. Who wants to get it off me for 500 bucks? And there's people that are out there that'll do it. Not because they're taking a loss, they're closing their trades too. You guys both close a trade together, you rip up the contracts, you walk away. Now, if the stock goes up, you make money very fast. Big deal, right? Because that's how you make money no matter what you do when you buy something. But now, if the stock goes sideways, you still make money. Because that option contract, that option trade that you sold is still losing value. As long as it stays above 135, we still can make money on the trade. If it goes below 135, we are going to exit the option trade. Understand, trading options is just like trading stock in the way that if I buy a stock at $138 a share, if it goes up, eventually I can take profits on it. But if it goes down, I can trigger my stop and I can exit that losing trade before it goes too far against me. Options are exactly the same. I can enter a trade on Monday and exit the following Wednesday. Heck, I can exit later in the day if I want to. So don't think that you're stuck. You manage it like any other trade. You have a predetermined stop. We're going to have a predetermined profit target, and we're going to manage that trade like any other. Now, here's what I want to do. I want to make this a little more specific. I'm going to show you some trades I did last year with my clients to kind of give you a better understanding of how we set them up. So I'm going to be showing you some numbers now, so pay attention. Now, first and foremost, when the market is bullish, I place bullish trades. And here's a tip. A lot of people are asking, well, Ron, how do you pick the price? We're going to pick the strike price that has at least a 60% chance of winning. Okay? So let me explain this. This is Pulte. Ironically, I looked at a trade on Pulte today. There's right now, home builders are great. I actually did a trade on Lennar. No, did I do Lennar? No, I did a trade on DHI, DR Horton, and I did a trade on Toll Brothers. That's what I did, those two stocks. Anyway, this is last year. I did another trade on these today. PHM, nice uptrend. Let's zoom in a little bit closer. Hopefully you kind of look at that stock and say, oh my gosh, I would love to be bullish on that. We're going to go out and we're going to pick an option that expires within 21 to 45 days. By looking at where that red line is, that's the July expiration, and it's right here in late June. That option's probably around 25 days to expiration. It's in that sweet spot, right? Now, if you didn't know this, when you look at options, pretty much every broker will give you this information in some sort of way. Some brokers call it probability of in the money. Some, like IB, you may have to go to their probability lab. I think Fidelity has like a probability calculator. They have, a probability envelope or curve. Every broker gives you this type of information. Now, what we can glean from that is we can look at the option prices that are available. Now, these are going to be puts. I think the stock is going to go up, so I'm going to go underneath the stock and look at the puts. The stock is at $76. I'm going to go underneath the stock and look at options. If I sold somebody a $75 put, what I'm going to do is I'm going to stay in the trade until I can lock in my profits that I want, and I can do that as long as the stock stays above 75 bucks. Okay, stock's at 76. I only have about $1 worth of protection because if the stock goes up, that's great. If it goes sideways, that's okay too. But if it goes below 75, I'm going to have to exit the trade and take a loss. Well, there's a 56% probability of me winning if I sell a $75 put. If I go down a little bit lower at the $73 mark, it also happens to have a 73% probability of staying above that. So now, as long as the stock goes up, sideways, but doesn't pass 73 at that second pink line, I can make money. If I go a little bit lower to 70, I give myself a 91% probability of staying above. Now, these numbers typically come, by the way, from the historical movement of the stock. Looking at what the stock has done in the past can give us an idea of what it's going to do in the future. Now, let me ask you a question. Without knowing anything else, if I approached you and said, hey, do you want a trading system at 56%, 73%, or 91% success rate? Which one would you take? Be honest. Which one would you take? Exactly. You take the 91%, right? Now, again, I'm saying you don't know anything else. Some of you already have an idea. I kind of see it in the chat window coming. But some of you, might have a little bit of knowledge on this. But if I were just to ask you, hey, 91% chance, do you like that? Most of you would say yes. Now, some of us who have been trading for a long time would say, okay, well, what's the average risk reward? All this kind of stuff. We'd know the right questions. But here's the thing. That 91% trade, that is what I call being seduced by probability. Here's what I mean by seduced by probability. Every time you win, maybe you make $100. Every time you lose 1,500. Doesn't sound very good, does it? 9 winning trades, you're going to make 900 bucks. One loser comes in, you lose 1,500. You've wiped out all of your profits. That's what happens when you do a trade that has too much probability. Now, typically what we're going to do is we are going to stay in the 60 to 70% range of volatility. We can go higher than that occasionally, depending on the premium of the option. Okay? That 60 to 70%, that is the sweet spot. Remember earlier I talked about 21 to 45 days as the expiration sweet spot? 60 to 70% probability of winning is also our sweet spot. So in this trade, I'll give you the answer to this one. I chose the $73 put. Now, what that does, I'd sell a $73 put, and in the same transaction, I buy a $70 put. This is called a bull put spread. Aptly named, I do say. Bull because it's something you do when you're bullish. Puts because we're using puts. And spread because I'm creating a $3 spread between my option I bought and the option I sold. It's called a bull put spread. Now, when I sell this position, I'm going to get paid. In this particular trade, I got paid around $1,750, around that price. Now, my goal is to lock in half of those profits. So, somewhere in the neighborhood of like 825, 850 area, that's what I'm really looking to make on this trade. Maybe even a little bit more. Okay? So, as the market goes up, what happens to that 1750 is the options immediately start declining in value. Now, this is one of those things you got to kind of get your head wrapped around a little bit as a new option seller. When you buy something, you buy it at a price with the hope that the price goes higher. Well, as an option seller, you're going to sell something with the hope that the price of that thing that you sold actually goes lower. We're going to enter the market at a high price and hopefully exit it at a lower price. So in this trade, I got paid $1,750. 3 trading days later, because the market went up significantly, I can now exit that trade by paying the broker. And what I look for is generally 50% of what I was paid. So if I enter a trade and I get paid $1,000, my goal is to exit the trade when I get paid $500, or when I can exit the trade and pay $500, giving me a $500 profit. That's the idea. Okay? Now, to give you another example, this is when the market is bearish. We're going to do bearish trades. Now, Target last year got beaten down pretty good. Couple of weird scandals that happened politically. Doesn't really matter. They went below a previous low, started moving lower. I like stocks that look like this for shorting. Target at the time was $130. I ended up going out to the July expiration. It was probably around 40 days to expiration. Remember, 21 to 45 is that sweet spot that I'm looking for. I go to my option software and I start looking for options now above, because I think the stock's going to go down. So when I think the stock is going to go down, oops, I lost my cursor. Where's my cursor? There it is. When I think the stock is going to go down, I want to create buffers above here. That way I can go down, sideways, or even come up a little bit, and I can still make money on the trade. Okay? So I go to my broker. If I sell a 135, now that's about a $4 difference between the current stock price and that price right there. So if I sell a 135, I have a 64% chance of making money. If I go up a little higher at 140, I have a 76% chance of making money, because now I can make money as long as the stock stays below that price right there. If I sell a 145, I now have an 85% chance of success. Now, based on what we talked about, based on what you learned so far, what do you think is the best option here to sell? Knowing what we talked about so far with the probabilities I'm looking for. Type in the chat. All right, I got a couple of you at 76%. 76. Steve, you're at 64. 64. 64 Rick. 64 Peter. C, 64 Andrew. 76 Jerry. Okay. Here's the deal. Anybody that said A and B, if you said A or B, you're right. You can sell either scratch that, B or C. If you said B or C, you are absolutely correct. Ah, yes, the live presentations where you trip on your own damn words. B or C. These are both fine. Now, here's what I do. When I place a trade, I'm going to look next at the risk and reward. I'm going to look at the probabilities. 64% looks good to me. But I'm also going to check 76%. And then what I'm going to do is I'm going to take the trade that gives me the most probability while maintaining the proper risk to reward. Now, when the options are extremely overpriced, you can go as high as 76%. There are even times when I can go as high as 85%. It's not very common, but there's times I can go as high as 85%. So in this trade, because of the overpriced condition, I was able to go all the way to 76%. Now this trade, same idea, different name. It's called the bear call spread. Bear, because we're bearish. Calls, because now we're using calls. I'm going to sell a 140 call, and I'm going to buy as insurance my 145 call. Now again, when I take this trade, I'm going to get paid, in this case, around $1,530, approximately. I don't remember exactly what it was, but that's what I got paid. Now, my idea here, my goal is to stay in this trade until I can collect half of that. So I want to get paid, around 760 bucks-ish. If it goes down, I can make that money usually within 7 to 10 days. If it goes sideways, I can make it in probably 10 to 15 days. And as long as it stays below 140, I'm going to stay in the trade until I make my money. Now, this is a more realistic rendition of what a trade does. It actually went down a little bit. It went down about $3 a share, really, not that much, but over the course of 7 trading days. And I was able to exit the trade for about 50% of what I sold it for, and I locked in my profit. So here's again how this works. When you enter a trade, you get paid. I was paid in this case around $1,530. Okay? I got paid, but I have a trade on. It's not like I get to collect that money and walk away. I got a trade on, right? My goal is to wait until that option premium drops and then hopefully go buy and exit the trade for $765. So when I enter the trade, I get paid. When I exit the trade, I now have to pay. When I collect $1,530 and only pay back $765, I get to keep the difference. And I become a successful winning trader. Okay? That's a nutshell on how option selling works. Now, another client I worked with is Jim. He said prior to working with me, he told me his results were very inconsistent and he felt that very unsatisfied. He kept thinking there had to be something else out there that was better. You ever felt that way? There's something out there that's better, you're missing something. He said he wanted a way to supplement what he was doing would provide him more of a regular income with a higher probability of success. He said after earning the system, becoming an option seller, he had 21 winners in a row, returned about 76% in 8 months, and his average trade only lasted 8 days. Can you imagine how that must feel to be going from inconsistent to where all your trades are generating income? Now that was Jim. What about you? What would an income system like this allow you to do? If you were able to average 3% per month. Now note that you're going to have some gains, you're going to have some losses here and there, but overall through the year, average about 3% per month. What would that allow you to do in your own life? Pay off your mortgage faster, retire, have a better retirement, right? Think about it. Put yourself in that position, just like Jim did, just like you saw Brian do, just like Bruce did originally. Okay? Now, we said before that buying is gambling and selling is about controlling risk and putting the odds of success in your favor. That's how you generate income. And it all goes back to whether you want to be the gambler or the casino, because remember, the house or the casino always wins in the end. By being an option seller, this is the way that we can safely and consistently make income every month. It allows you to do it safer with that higher probability of success than simply just buying and selling stocks alone. Now let's put this together. I want to show you how you can have a bulletproof system that you can do in as little as 15 minutes a day. Now, my students who have implemented the system have told me this is the most important thing they learn. Now, why is it important? One of the biggest things people ask me is how much time is it going to take me? Well, that's a great question. Here's the challenge. There's thousands of stocks out there. You got to find how to pick the right stock, the right strategy, when you get in, when do you get out, what expiration, what if it goes against you, et cetera, et cetera, et cetera. And it feels like you're trying to find a needle in the haystack. There's so much information out there, you don't know where to look or what to count on. You spend hours researching trades or going from guru to guru looking for advice. Without a good system, you're trading blindly. You're like a mouse running into a maze, bumping in after wall after wall. You don't know where to go. It's stressful. It's disheartening. But when you have the right system, you can identify good trades, get reliable income in as little as 15 minutes a day. But to get that, you need a system, and not just any system. A straight line system, a really simple way to know when to place your trades, how to find them, how to set them up, and how to manage them. So let me walk you through the pieces of the option paycheck system in the order they go in. No one else teaches option selling this way. This is like the secret sauce. There's 6 pieces, the top 5 build each other, and then that 6th kind of ties it all together. At the top of the system is market direction. A lot of traders just ignore this. They go out and start placing trades. You're going to be placing trades that are either bullish or bearish. So you have to have a way to know the market's direction. By doing this, you're narrowing your focus. So instead of looking at everything, you're looking at 1 or 2 possible scenarios. That's it, 1 of 2, that's all. Our options paycheck system has a timing signal built in that we use to tell us the market's direction. Now, once you know the direction of the market, you're going to want to find stocks that are highly likely to move in the same direction. So just trading the stocks you know or listening to the gurus on TV, it's not the best choice. You want to find good stocks already in uptrends when the market's rising, bad stocks that are in downtrends when the market's falling. Now, our options paycheck system uses 2 ways. We look at fundamentals and we look at price trend, so the charts. We have pre-built searches in our VectorVest platform we use. That way you kind of save a lot of time digging through all that data to get from the institutions. Now that you got your list of stocks, you're going to want to find a way to select the best ones for option trading. Earlier, we looked at how big of an effect volatility had on options price. So we focus on selling options with volatility in the upper end of the range, but we don't stop there. To take even more risk out of the trade, we filter out those with upcoming earnings because that can make the stock move a lot within one day. But we also want to make sure that we're in that time decay sweet spot by choosing the right expiration. Now you can use tools from your broker to help. We have to have a proprietary search tool, can find these in really just a matter of a couple seconds. Now it's time to set up the trade. We want to pick the one that has the highest probability of success based on each of the strike prices that you see. However, we also have to manage the right risk to reward ratio. It's no good having 90% probability if one losing trade is going to wipe out all your winners. We have to balance all of this. Okay? Now that you've got your trade selected, now we need to know what to do if the trade goes for you or against you. We're not even in the trade yet. I don't want you sitting in a trade feeling frozen like a deer in the headlights because you don't know what to do. We have rules that helps you take profits at predefined levels. You can set these up in advance with your broker. If a trade goes against you, we have a simple adjustment strategy that brings in more income to minimize losses. We also know exactly when to exit a trade, and I set that order up in advance with my broker. That way it happens automatically and unemotionally for me. And then lastly, you'd like a way to do this quickly. You don't want to be spending all day in the process, right? You need a tool that allows you to do these things. It should be something you're comfortable using. Some brokers have great tools. IAB's got good tools, Fidelity, Thinkorswim. You might find some paid tools to be effective. For example, I like our proprietary tools from VectorVest called Options Pro. It saves me a ton of time in my trading. Now, earlier we talked about Mike and Jim. They said each of them is getting their results in about 15 minutes a day. Well, so is Hugh. He told me one of his biggest struggles was finding a system that was efficient and worked. He said he sought the proper balance between trading and free time. He didn't have that proper work-life balance. Are you like that too? Do you spend too much time doing things you don't want to do and not enough time doing the things you want to? Now that Hugh has learned the options paycheck system of selling options, he said he has more confidence, more free time, and he's able to have more fun. In his first 43 trades, he had 38 winners and returned over $26,000 in 4 months. So I want you to do this. I want you to take your pen. I want you to put a little star next to the part of your system where you're good. For example, if you have a quick way to find a list of stocks likely to go in the direction of the market, put a little star there. If there's an area where something isn't working or maybe you need a little work, put a frowny face there. For example, if you don't know how to manage and repair your trades, put a frown there. Don't overthink it. I'm going to give you about 10, 15 seconds. I want you to give yourself a star or a frown. Now, I'm willing to bet maybe 1 in 100 investors will ever know how to do this. So let me ask you, in the chat, I want you to share with me, what areas do you need to work on personally? Just type in the chat what some of the areas you need to work on are. I'm kind of curious to see where we're all at. All right, Ed, stock finder, trade management, Dennis, doing spreads, Toby, so probably option selection, trade management, all of them, William, finding balance between both sides, when to buy or sell. Okay, option selection, stock selection, market trend. All right, so it looks like I'm going to say the vast majority seem comfortable with market direction and stock selection. Now, there are a few of you that said stock selection and market direction too, but here's the cool part about this. It doesn't ultimately matter where your answers were. What we're doing by trying to illustrate this is to show you where the weakness in your own trading lies. We need you to ultimately get to having stars all the way down, because once you do, this is how you'll be able to get to that generating income and do it in less than 15 minutes a day. So listen, I can't know your exact reasons for coming to today's webinar, but I'm going to make a few guesses here. Maybe you've been trading blindly, bumping into wall after wall. You don't know what to do. You feel like you're trading blindly. It's leaving you with inconsistent results. You make a little bit of money, then you lose it all in your next trade. Just like Jim said he did before he learned the options paycheck system. Maybe you're suffering through loss after loss, and those small losses are just killing your portfolio. The money coming in isn't exceeding the money going out. Maybe you're just not where you want to be. Now, today I showed you the secret to fixing that. And again, it's a secret I bet only 1 in 100 investors will ever know, and now you're one of them. You saw it's possible to win even if you're wrong. You can do it with very little risk, even less risk than buying and selling stocks. You saw the system that's going to help you get consistent income every month. And I showed you just a few of the many people who use the system every day so they never have to worry about their retirement again. You saw over and over the secret to generating consistent income is that shift from being the gambler to being the casino. Remember, you're going to be that one investor out of 100 who knows that secret. That means there's 99 other investors out there who will continue to do things wrong. They'll be buying options, making all the mistakes we talked about. Can't stop them from doing it. There's always going to be those investors out there who will buy options incorrectly. Let them be the gamblers. As long as there's gamblers out there, you may as well be the casino. Because remember, the house always wins in the end. The option paycheck system teaches you how to stack the probability of success in your favor. Just like it taught Brian and Bruce and Bob and Jim and Hugh and John. So if you're like most people, you're wondering, how do I implement the options paycheck system in my portfolio right now? Well, you have a choice. Option number 1 is you can choose to do absolutely nothing and stay where you are. And if you already have enough money to retire, you're not worried about running out of money, then maybe you don't need the options paycheck system. But if you'd like to make some extra income, that leaves you with 2 other options. Option 2 is you can try to do it alone. Try to learn how the option trades work. Try to figure out the direction of the market, and then learn to analyze the thousands of stocks to find the best ones to trade. Hope that you pick the right one. Manage it correctly. If you're willing to work hard, put in the hours in front of your computer, and you're willing to learn by trial and error, listen, you could pull it off. But option 3 is just to let us guide you through it. I'll walk you through each piece of the option paycheck system, and in just a few weeks, you're going to have that simple system to follow that doesn't take a lot of time. Of those 3 options, ask yourself, what's going to be easier for you? There's 2 types of people. Person number 1 is someone who dreams about their financial goals, but they never take action or do anything to make them happen. Person number 2 is someone who's serious about your financial future. You're ready to take action when you see an opportunity in front of you. And since you're dedicated to be with me to this point, I'm willing to bet you're person number 2. And that makes you the perfect candidate to get started on your first options paycheck. So let me tell you what we put together. The Options Paycheck Experience is the most comprehensive program for generating consistent income using option spreads, even if you've never traded an option before. The Options Paycheck Experience is the only implementation program of its kind that teaches you the secrets of generating consistent income with options, because we're going to show you exactly how to find, set up, and manage your spreads to generate income, and how to do it safely and consistently in any type of market condition. That way you never have that fear of running out of money. After going through the options paycheck experience, you're going to know exactly how calls and puts work, along with all the fancy terms, so you never have that fear of options. You're going to have clear signals telling you whether to trade bullish or bearish, and even when to not to trade. You're going to be able to quickly identify the stocks that make the best candidates for your option income trades using a rules-based approach, and that's going to free up a lot of time in your life. We're going to show you how to set up income trades that can give you a base 70% or better success rate. Again, even if you've never traded an option before. You're going to have a trade management game plan in place prior to placing your trade, so you know how to handle any situation the market throws at you. You're going to be able to confidently enter and exit trades with your broker, like a pro, whether it's your first trade or your 500th trade. You're going to implement a system that helps you safely and consistently generate income. Okay? That way you can live that lifestyle you want without that fear of running out of money. Now, the course itself is 8 modules, and we made them so each module builds on the one prior. As you go through the modules, you're getting closer and closer to that end goal, which is that system for consistent income. Now, the first 2 modules, we call these the option income foundation. And a lot of people, they try to build a successful income portfolio, but they base it on such a weak foundation of knowledge. Listen, we understand what it's like to learn options for the first time. We've been there too. It's why it pays to learn from a team who's gone through this before. The outcome you're going to get in module 1 is you're going to know exactly how calls and puts work, so you can confidently use them in your trades. You're going to know which terms to pay attention to, which to ignore. That way you don't waste your time or get frustrated. In module 2, you're going to learn what a spread is and how it works. You're going to be filled with the confidence that you need to start building your income systems around these new trades, the bull, put, and the bear call. Now that you got that solid foundation of options knowledge, it's time to start laying out that step-by-step system to placing income trades. That's going to help you generate those options paycheck. Now, each step along the way here, we're going to be stacking more probability in your favor and reducing your risk. And it all starts with knowing when to trade. Here, we're going to give you complete clarity on market trends. So instead of placing trades, everywhere, we're going to narrow our focus. We're going to know whether to place only bullish trades, only bearish trades, or even when not to trade. After you know the direction of the market, you're going to want to find stocks that are highly likely to move in the same direction. That's going to stack your probability even more. So the outcome here is you're going to know how to quickly find the best stocks and indexes to trade that give you the highest probabilities. Now that you got your list of stocks, we're going to narrow it down to the best option candidates that give you the highest probability for profits. So by using the rules in this module, you're going to make sure you're getting paid top dollar for your trade and making it so you can make money even if the stock doesn't go anywhere. You're going to continue to stack probability and reduce risk in module 6 by the way you set up your trade. You're going to make sure your trade has the perfect combination of risk and reward, so you're going to know exactly where to set your strikes, which option you sell, which option you buy. Great trades, they don't happen by accident. They happen because of careful planning and strategically setting them correctly right from the very start. Now that you've got your high probability trade picked out, you ready to place it? Module 7, we're going to have your plan in place so you know when to exit the trade, not only to take profits, but to minimize losses. You're never going to be frozen like a deer in the headlights again. No matter what the market throws at you, you're going to know how to react, and that's going to allow you to trade completely stress-free. Now that you got the best trade, best stock, low risk, high probability trade, you mapped out your game plan, it's time to place your trade. This module is going to break down the trade execution phase into simple, repeatable steps that you can commit to muscle memory in no time. Now, we put everything you need into a great checklist. That way you never miss a step. When someone's first starting out, it's always comforting having that security blanket there to make sure you're doing everything correctly. Plus, placing trades with your broker, that can be intimidating. So in addition to video walkthroughs of several of the popular brokers, we put together click-by-click directions for the most popular one, Thinkorswim. Now, before we talk about the low price of the course, I want to make this even more low risk for you. We offer a 100% money back guarantee. Go through the entire course. If you're not satisfied that we taught you how to profit using options, just notify us within a week of finishing the course and you get all your money back. It's completely no risk. All we ask is that you give it your best effort. Come to the classes live, or you can simply watch the recordings. Do the assignments, because we know if you do, you'll see the results. If you don't do the work, you won't be eligible for a refund. Now, the reason why I have such a tight refund policy is because I only want to attract those who are excited to jump in, do the work, get the results. I want to attract serious investors. In order to do that, when I make a tight refund policy like this, I only attract those people who are serious about getting the results. And when you do the system, you'll be learning a system that over the course of time is averaged at 3% per month. That's 36% per year. And it doesn't take a lot of time to do it every week. I received this email from a client who took the course. Ron, I'm writing to thank you for teaching the options paycheck course. I took your class last fall and wanted you to know my results for the past 10 months. I keep a journal to document every trade. So far, I've profited on 239 trades out of the 350 I've taken, a 68% winning rate. I've profited over 100,000 in this time. What's more exciting is that since my knowledge and experience had grown in regards to taking really good risk reward trades, I've profited over 50,000 in the last 6 weeks. My success rate has been 78%. Over my last 100 trades, I only take trades with 2 to 1 or better risk reward. Thank you for teaching this simple but effective system. Now that's awesome stuff. I want to point a couple of things out. Number one, if you read that, over the past 10 months, he took 350 trades. That's 35 trades a month. Do you have to trade 35 times a month on average? No, of course not. You can trade the SPX index, which is just 1 trade a week. Okay? Still do very, very well with that. But if you're more active, you can trade like Joe and trade 35 trades a month. It's fine. I personally trade about 10 to 15 trades a month, maybe sometimes more. So, you can scale this system to whatever you want. You can start with 5 grand. You can start with 100 grand. You can trade 30 times a month. You can trade once a month. You can trade twice a month. It's a beautiful scaling system. Now, let me ask you a question. If I went back to Joe before the course, I said, hey, Joe, I'll give you 100 grand if you give me 2. Do you think he'd take that trade? Is that a trade you take advantage of? Well, let me make you a great offer too, as you're going to see here in a minute. Now, before I tell you any more about it, I want to point something out here. It's important you understand this is not a get rich quick scheme, okay? It's not. It's not something where you should expect to become a millionaire in the next 24 hours. This is serious and requires some serious effort on your part. So if you're not going to commit to it, then don't do it. It's not for you. This is for serious people who take their investing seriously and are willing to put in the time to learn the system. So if you're serious about this, you're ready to jump in and do the work and get the results, then the options paycheck system is perfect for you. Step-by-step training to go from options basics to a full, complete income generating system. Just these training modules alone are worth the price of the course, but I put together some cool bonuses for you as well. The first bonus is what we call the mastery package. The mastery package includes module by module mastery sessions. Each week, I want you to cover 2 of the modules on your own. Okay? Then we get together live and we discuss the 2 modules. You can ask questions of me. We'll go over the assignments. We'll do some review. We'll do the quizzes with you. It's a way that we get together to do questions and answers. We record them for you, so it doesn't even matter if you attend them live. You can watch the recordings within 24 hours. We're also going to have a dedicated Q&A on Friday. That means there's 3 live sessions a week that you can take advantage of. We record them all, so if you can't make the live sessions, that's not a big deal. Watch the recordings. You're also going to get a private email that goes right to the Options Paycheck team. If you don't already have it, we're going to give you access to both VectorVest and the Options Pro software for the 7 weeks of the live course. You'll get that around August 1st, and you'll have it through the live curriculum, August and September. Okay? That way you can test our system, test our tools and techniques. It's cool. If you don't want to use our tools and techniques, no big deal. You can use anything with this. That's the great part about it. Now, our goal is to have you ready to place your first income trade in the shortest amount of time possible. To help facilitate that, the second bonus is you're going to get the implementation month. You're going to get access to my live trading sessions. Okay? I showed you those couple of trades I took last year. Every Monday, I do live trading. I mentioned that I took a couple home builder stocks today. I did DHI and I did Toll Brothers. I also did a trade on IBB, which is the biotech ETF. But anyway, you're going to see me place live trades using the options paycheck system. You're going to get invited to that. I do a session for stocks and I do a session on the SPX. You can pyramid my trades if you want to. Do the trades we're doing in class. I have a lot of students that do. We're also going to have live office hour sessions. So beyond the live trading events, we're going to get together twice a week just to continuously repeat the process of finding and executing the trades. 12 total sessions. Okay. A lot of our clients said that these sessions, those office hours and the live trading sessions, were the best part of the course because it helped them cement the concepts and the processes for them. Now, if you're worried about stock selection, all that's going to be a lot, we have another bonus called the SPX Paycheck System. It's where I take the entire course, boil it down to something you can do as 15 minutes a week. It's one trade, one ticker symbol, one setup rule, one profit rule, one stop criteria. It's simple. It's easy. My teammate Brian taught this to his 14-year-old daughter at the time, and she was able to pull off on the trades. For a lot of my students, it's the only system they use. So as a recap, you're going to get the complete options paycheck training program. It includes 8 training modules, videos, checklists, cheat sheets, quizzes, slides, and more. You're going to get the bonus mastery package, the implementation month bonus, the SPX paycheck system. Total value all wrapped up is $54.75. So here's the opportunity in front of you today. Okay, I'm going to roll up my sleeves, work with a few hundred people over the next 2 months. We're serious about generating income. If you choose to be one of them, we're going to create that income system in your portfolio, even if you've never had success with options. So if you want to join me, have me take you by the hand and help you install this system in your portfolio, then instead of that $5,000, the early bird price for the course is only $12.95. Now, since you've stayed with me for this hour, here's what I want to do just for you on the live webinar. If you order before the end of the live webinar today, instead of paying the $12.95, you can get it for $9.95. That is the lowest price you are going to find the course unless you've already taken it once. That means you're going to get the full course, 1 year of access to all the course materials, about 7 weeks access to VectorVest and Options Pro if you need it, the implementation month, the mastery package, all for $9.95. Once we finish, the price goes back up to $12.95. Sign up for it. All you got to do is go to our website, www.optionspaycheck.com. And listen, I know that $9.95 is money, right? It's real money. But you got to ask yourself, what's it going to cost you not to do this? How much money are you going to lose by learning by trial and error? How much profit are you going to give up on? How much time and energy are you going to spend trying to do it on your own? Then ask yourself, how would your life be different if you did it and it worked? Even if it doesn't work for you, we have a money-back guarantee. That's the best part. It's risk-free. There's an old expression that the best time to plant an oak tree is 20 years ago, so you can be sitting under it now enjoying the shade. You know when the second best time is? It's today. It's not too late to begin to prepare yourself for retirement and learn to generate income. This is one of those deciding days in your life. Is it going to be the day you decided to take action and set yourself up for a secure retirement? Or is it going to be the day you decided to take action? Or, look back and squander this opportunity? Don't regret the decision you make. Don't miss the opportunity. I look forward to working with all of you in our classes. So again, get out there, go to www.optionspaycheck.com, get yourself registered. That $9.95 price is only available while we're live on the webinar. So if you've never taken the course, you want the lowest possible price, optionspaycheck.com it is. After the webinar, back to $12.95. Don't wait. I don't want you to miss out on this deal. Just go to www.optionspaycheck, fill in your details. And hey, do me a favor. If you know that this is for you, if you're going to do it, just give me a quick shout out in the chat box. Say, hey, I'm in. We're going to welcome you to the class by name and tell you what's next. Now, before we get into the Q&A, I want to cover some of the most common questions I hear. First, when are the live sessions? When does the class start? What's all that stuff? Well, here it is. The class actually starts live tomorrow at 4:30 p.m. Eastern Time. Registration closes at 10 a.m. tomorrow morning. Now, the $9.95, you have to register now for it before the end of the webinar. But if you wait, you're going to pay $12.95 for it. And we close it tomorrow at 10 a.m. So tomorrow at 4:30, we have a welcome session. That's where we're going to cover a lot of what, we're going to cover the university site, make sure you know where all the materials are, all the stuff that, you need to do to make sure the class is successful. Then right on Wednesday, we're going to go over Module 1. So if you sign up for the class tonight, I want you to watch Module 1 by Wednesday night. Okay? Then on Wednesday, we're going to get together. We're going to discuss it. On Thursday, we're going to discuss Module 2. When I say discuss, we're not teaching it, we're reviewing it. We want you to watch the modules on your own. They will become active for you as soon as you sign up for the course. Then on Friday, we will have a Q&A session that covers Modules 1 and 2. Now again, if you cannot do our live curriculum, not a big deal. We record all this stuff for you. So if you're on vacation this week, it's like, dang, I can't start out. Yes, you can. Sign up for the course, watch everything recorded. You'll be able to come right back in next week. You're going to get access to our emails that goes right to me. You can do it. There's 2 sessions a week we want you to work with. Next week will be modules 3 and 4, the following week 5 and 6, and then the following week after that 7 and 8. Through the month of August, we're going to teach you the 8 modules. Then, that way, in the last week of August, the last week of August, we're going to start implementing. Right on Monday at 11 a.m., we're going to place SPX trades. Then at 2 p.m., we're going to place stock trades. Market contingent, of course. If the market's not in the right patterns, we can't do it. That doesn't happen very often. Then on Tuesday at 4:30, we're going to do an office hour session. What are the office hours? We're going to repeat the process of trade selection. I'll use the broker software. I'll use VectorVest and Options Pro occasionally. We're going to teach you how to implement this constantly. We place trades in the evening for the next market day. I'll teach you how to do that. There are just more ways for you to get together with us live and learn. So that's through the month of September. And the course wraps up September 20th with our last session together. All of these are recorded. You can watch the recordings within 24 hours after the session. Okay? Another one of our signups, Greg, he said, prior to the course, I struggled with knowing how to protect myself when the market was moving away from me. And I feared if I didn't fix it, I'd lose more of my portfolio than I could afford to lose. After taking the options paycheck, I feel better prepared to trade and much more confident. In the first month, I made a net of $10,200 from my option trading. 9 winners, 1 loser. I would absolutely recommend the course. It was well done, very educational and informative. It's an excellent educational opportunity that I'm thankful I took advantage of. Don't let fear hold you back. You'll make more in the first month than you paid to take the course. I was one of the fencers who didn't take the course for a long time when I saw it offered. I lost a lot by not taking the program sooner. I'm very grateful and appreciative of the hard work that was put into making the training program available. Thank you, Greg. Second question is, how much options experience do I need? We poll all of our attendees that have attended this course over the last 8 years. 85% of them said you can be successful with little to no prior options experience. Everything I do is about probability. I'm putting the probability of success in your hands. 85% of our graduates said you can be successful with little to no prior options experience. So you can do it. That's just not me saying it. That's our prior attendees. Just a few more of the folks that have gave us some great testimonials. Cheryl, I've surpassed my expectations. I don't need the money back guarantee. I tripled my investment. Frank, after taking the course, I already have a profit of $7,300. Before the course, it was a crapshoot. Now I believe in the options trades I'm doing. Cam, made back the initial investment so many times over. Even though it's a small part of my portfolio, it's probably the most profitable. Jake, I finally found a method of making consistent income with a high probability of success. And from some of our more recent graduates, Neville, thanks for the wonderful course. Within a short period of time, you've opened our eyes to many things. Your experience, enthusiasm, and desire to teach comes across easily. You put a lot of thought in the training manual, already paid for the tuition with a few Delta 35 SPX trades. David, the paycheck experience is by far the best course I've ever attended all my years of VectorVest since '99. You've eliminated my fear of option trading. The manner in which you presented the material is truly outstanding. And then Ben, the attention I received for all my email questions was above and beyond what I expected. A lot of my questions were demonstrated in class, and that made my learning much easier. Great job. So again, don't miss out. Go to www.optionspaycheck.com. Get yourself registered. That $9.95 price, only available while we're live on today's webinar. After the webinar, back up to $12.95, and registration ultimately closes tomorrow at 10 a.m. Don't miss out. Get started. You don't even have long to wait. We're going to start the class tomorrow. That's the great part about it. All right? All right. What I'm going to do next, I'm going to bring in my colleague, Brian, and Brian is going to help me do some Q&A with you to answer any remaining questions that you might have. Brian?
All right. Hey, Ron. How you doing?
I'm doing good. Good to hear your voice.
All right. Exciting that it starts tomorrow.
I know. It's kind of like, man, I don't know. Been doing these for so long. It's like, this is my Super Bowl. I love this stuff. It's like, this is my most exciting time when I get to do these.
We build this up for months, and then we finally get to start it up. So this is just a good reminder for everybody that $9.95 is good while we're here live. It's your last chance to get that low rate. It'll go to $12.95 when we're shortly after we're done here tonight. Registration closes in, what would that be, about 12 hours from now, basically tomorrow morning at 10 a.m. Eastern time. That'll be your last chance to get in at all. And then we have our first live session tomorrow afternoon. So get in while you can. We did have I'll cover a couple of quick things. We had some people in the chat who are alumni of this course because we've been teaching this for a while now because it gets people great results. Alumni who have taken this course before, a lot of times say, hey, I'd love to take this over again just as a refresher because maybe it's been a couple of years. We do have an alumni rate, which is $4.95. And we would have sent you an email this morning with a private link in it. Or if you just put in the chat that you're an alumni and you want to do this at your discounted rate, John will we'll check your account first and then get you a private link. And let's see, other than that, let's just plow forward and get to some of the questions here. Ron, we had the first question I promised Sherry that I would come back to. Sherry was asking, hey, Ron, I only have $10,000 to invest. Do I have enough money to even do this with?
Yeah, you do. With 10 grand, I mean, you can trade 2 contracts of the S&P At 2 contracts of the S&P, you know, on a good month, you could make $300 to $500 with a $10,000 account. That's still a good amount of money. And then again, if you saw in the beginning, if you compound that, you trade 2 contracts at 10,000. Once you get to 15, you can trade 3 contracts. Once you get to 15 or 20, you can trade 4 contracts. So that compounds very, very nicely. So yes, 10,000 is enough to do it. It really, really is. Be realistic. I'm still telling you on average about, well, compounding the return on the S&P is a little over 4% per month. But, be realistic. You're not going to make, 10 grand a month or anything like that. All right. But yes, if $300 to $500 a month possibly is okay with you, then it's the perfect course for you. You have plenty of wiggle room.
All right. And for those of you who are in, welcome aboard. We tried to welcome you in the chat because we're excited. So check your email. You should have gotten a welcome email from us with all the juicy details in it as far as how to log into the course, when the sessions are, how to access everything. So check your email. If you happen to find it in your junk or your spam folder, please just mark it as not junk or not spam and drag it over to your inbox. That should train your inbox to put all of our other emails into your inbox, because we're going to be sending you emails throughout the course to keep you notified of when things are going live, the schedule for the upcoming week. So we're going to send you probably a couple of emails a week to also keep you motivated and let you know what's going on that week. All right, so Ron, for the people who are in, and also for the people who aren't in, maybe it'd be a little insightful if you showed them what it looks like behind the scenes, like when they sign into the course, actually kind of show them what they're going to get.
Yeah, absolutely. So here is our university site. So you're going to get a link, and this is where everything is at. This is where you're going to be kind of like your home base for the next, 2 months, really even longer than that. If you want to keep watching the materials for that year, you get access to the materials. So over on the left, you're going to see kind of our lesson, our table of contents, if you will. And then in the middle, this is where you're going to watch the videos. Now, really quick, you can make them larger. There's a little button in the lower right-hand corner. You can maximize that to the full screen so you can watch the whole thing. Hit escape, takes it back. But there's a watch me first. That's just going to give you kind of a background, just in case you forgot what the course is about. Understanding the switch between buyer, gambler, et cetera, et cetera. Then you're going to go to see the welcome recording. Now, I'm going to be doing this live tomorrow at 4:30, but you'll see a link posted there on Wednesday of the live class I do tomorrow night. So if you want to watch the live recording and maybe you're not available to be there live with me tomorrow, you can watch the recording here. That's where it's going to go. Now, one of the first things I want you to do, though, go down to where it says course curriculum checklist, open that up, and print that out. There's one huge thing on this course curriculum checklist that I want you to do. If you go all the way to the last page, page number 6, this is a schedule of all of the live events that start tomorrow and the times in the Eastern time frame. Okay? It's our schedule of events. 24 hours before the event, you are going to get an email on how to get to the event. However, we also know that emails don't always work, is what it is, right? Emails. So if you go to our table of contents and you scroll all the way to the bottom of the list, you're going to see a webinar link area. Open that guy up, and you're going to see links to all of our live events. So if tomorrow it's like 4 o'clock and you're scrambling through your email like, Ron, I didn't get the message, I didn't get the email, just click right there. That's how you get to the live event. If the same thing happens to you on Wednesday, click right there. That's how you get to Wednesday or Thursday or Friday. And then next week, these sessions will become active that we can do. So that's very important. I want to make sure that you know how to get to the live events if the email doesn't come. Now, the rest of the course curriculum checklist is very nice. It's nothing huge, but what it does is it gives you a list of everything I want you to do for the modules. I want you to watch the snapshot, the lessons, the review, the module questions, the reviews, everything. If you scroll down a little bit farther, you're going to see module 1, and there's 8 modules. If you look under the recorded lessons, this is where you find the snapshot video. In module 1, there's 4 lessons, all 4 lessons. You're going to see a module review and an action items. That takes care of that and that. If I scroll a little bit farther, you're going to see the review questions. That takes care of that right there. If you have problem doing the action items, we actually have a walkthrough video that you can watch. Okay? We have frequently asked questions. We would tell you to go there first to see if your question's answered. If not, email us. Ask us in the live course. It's cool. That's what we're here for. And then lastly, in each of the modules, you're going to see a mastery session recording. So if you open that up, within 24 hours of the live event, you see this one says May 1st right now. That's because we don't have a new one yet. That was the last course I did. Now, on Wednesday, within 24 hours, that'll be updated, and you'll see it'll change to July 31st, 24. You'll be able to watch that. So you watch the modules on your time, then you come to the mastery session where we review them with you. And again, it's the same through all 8 modules. Now, after the 8 modules, we talked about the SPX bonus session. It's right there. A lot of people just use the SPX system. If you want to learn it right away, do it. SPX Paycheck gives you the background of the SPX system. I would encourage you to try the 35 Delta trade. It's the easiest to trade as a beginner. It's the one that I would suggest you do. Least amount of risk. Okay. And the one thing I will tell you about this, a lot of people say, Ron, people should start with the SPX system. Here is the thing about the SPX system. That is a system that tells you exactly what to do. You are going to sell this option. You are going to buy this option. You are going to use this expiration. That's it. If you're the type of person that's going to say, well, why should I use that price? Why should I use that expiration? Why am I getting out at this price? Why am I exiting at this price? Wait, because the whys are going to be taught to you through modules 1 through 8. But if you're okay with just, oh, I should do this and I should do this, SPX Paycheck might be a good place to start for you. It's up to you. Doesn't matter to me. Then we've got the section for our Q&As and office hours. This is where you're going to go to the recording like under week 1. Friday's Q&A, the recording will be listed there. This is where the live trading session recordings will go once we start doing those in August, late August into September. You're going to get a subscription to Options Pro, which starts August 1st. If you open up this, there's going to be some tutorials for you. I always recommend people reviewing the risk graph. That's like one of the biggest things that new option traders need to learn how to use. Then you're going to see some broker help videos. I've got Thinkorswim, E-Trade, IB, Ally, and Fidelity. Those are the brokers I have so far. I'll probably be adding Tasty Trade sometime in the next couple of months. I just got access to their platform with a small account, so I'll probably be adding that, but nowhere like in the next 2 months or so. It's probably going to be about 4 or 5 months before I have time to do that. And then, of course, those webinar links. Right below that is our resource section. If you open that up, this is where you're going to be able to download all of the materials. So if you want to print out all the slides in color or black and white, they're right there. The checklist worksheet. As you get into the later modules, you're going to be given the position sizing worksheet. You're going to be given the stock credit spread checklist that we need. Under the SPX, you're going to get the SPX checklist and all that kind of stuff. So everything that you need to download the material-wise is right in that section. So that's a tour of what the university site looks like that you're going to be based at for the next couple of months.
All right. Very thorough. Some people think, oh, I'm just buying a course and I'm afraid I'm going to spend $1,000 and I'm just going to get like 3 or 4 videos. Well, hey, first off, if the 3 or 4 videos helped you make a lot of money, it'd be a great investment. But this course is very thorough with a lot of resources and helpful things to help you get results as fast as possible. All right, so this next question is from Chuck, and then we have a question from Samuel. So the question from Chuck, which you touched on as you went through the course there, Ron. Chuck wanted to know, are the SPX credit spread trades like stocks, or is it a totally different type of strategy?
Nope, still the same. Bull puts and bear calls. A little bit different on the selection process based on market direction. There's not as much, we don't do as much selection as we would the stock with market timing, making sure this is done. The stocks are a lot more selective than the S&P. So same idea, bull puts and bear calls as stock trades.
Okay, next is from Samuel. Now, you also touched on this when you were answering Sherry, but let's just answer it again for Samuel. Samuel wanted to know how much would be needed to start doing this system.
At the very least, $5,000. That's really all you're going to need. That's only going to allow you to trade one contract of the S&P. And again, if making $150 to $300 a month in a good month is okay with you, then that's $5,000. I always recommend people, if they can, start with like $25,000. You don't have to, But 25 grand is a nice number because you'll be able to take some S&P trades, you'll be able to do a couple stock trades, you'll be able to kind of like work around that a little bit. So, 5 grand's the minimum, 25 is a nice starting point. You can trade all the way up to probably 400 or 500 grand with this system to still have it working.
All right. A couple of quick reminders. The $9.95 is good while we're live here. We're almost done wrapping up the Q&A. So please go to optionspaycheck.com because registration does close tomorrow morning. The $9.95 rate is only good for the next little bit. Then it'll go to $12.95, which is still a great investment. And then that'll go away totally tomorrow at 10 o'clock Eastern time, 10 a.m. Eastern time. The reason it's 10 a.m. is because we have our first live session in the afternoon, and we need to make sure that we get everybody notified and ready to get into that first live session in the afternoon tomorrow. Okay, so let's see. And by the way, we did have some people, after I mentioned the alumni rate, type into the chat box and let us know that they were alumni. So if you missed what I said earlier, if you've taken this course before and maybe it's been a couple of years and you just want a little bit of a refresher because you liked going through all the coaching with Ron and you like the live sessions, for whatever reason you want to do it again, we do have an alumni rate of $4.95. We did send out an alert email to all of our alumni again this morning with a special link. If you feel you qualify and you'd want to take advantage of that $4.95 rate for alumni, I just post in the chat and John will help you out with that private link, or you could call our team. We'll put our phone number into the chat for you, and you could just call and you could talk to a real live human being. Okay. All right. So Steven wants to know how much a month can somebody make doing SPX trades approximately?
It depends on your account size, obviously. On its own, without taking compounded returns, the SPX, again, you're going to have months where you make money, you're going to have months where you lose money. But over the grand scheme of the system, the SPX has averaged about 2.5% per month over about the 15 years that I've traded it. You're going to have years where you can make 40%. You're going to have years where you might make 12%. But the SPX alone has averaged about 2.5% per month. Again, that's going to take some years where you do really well, some years where you don't do as well. I've never had a losing year with the SPX trade, just kind of tell you that. But, figure 2.5% per month, overall per year or per month with the SPX alone.
All right. We did have, now on the other side of things, to some questions we were talking about earlier as far as minimum size, we did have some people listening in on the YouTube stream. They were asking two people specifically, David and Walter. We're talking about the upper end. They have some bigger accounts. I'll just read what David wrote in. He said, does one have to trade more frequently than once a week to make that 3%? Or does more frequent trading tend to equate to higher returns? I know that's not a size question of an account, but he's talking about frequency of trading and results. And then maybe I'll just add this one in there, Ron. Can the system keep scaling no matter how much money you have?
Good questions. So number one, yes, the more frequency of trading, the more money you can make. I limit myself. I only risk, typically the most I risk on my account's about 7 to 9%. Sometimes I go a little bit higher, but mostly I risk about 7 to 9%. We've got clients who are comfortable risking 10 to 15% on all of their trades, even up to 20%. So the frequency will affect the overall return. The more you trade, the more you can make. It's as simple as that. I trade 15 times a month. I hope to make 3%. You trade 40 times a month, listen, you can make 6% on average. So yes, that does affect it. You have to find a place you're comfortable with. Second of all, no, it does not scale infinitely because you are trading options. Options do have a limited amount of liquidity. So realistically, when you get up into the $400,000-$500,000 range of this, you're going to have a very, very limited amount of options to trade. You might be able to trade SPX, maybe some Tesla, maybe some Microsoft, things like that, but you're going to have a lot less trading opportunities. So I say at 400 to 500, that's where you're going to find less and less and less trade opportunities available to you. So yeah, it will eventually scale out. Yes.
All right. So Mr. Wheeler, I think that's all I got for you. So Just a reminder for everybody, the $9.95 is good for a little bit. Go to optionspaycheck.com. We are set to go tomorrow morning. Tomorrow morning registration closes, but tomorrow afternoon, first live session. So Ron, I'm going to pass it over to you so you could maybe pump everybody up one last time, but I'll let you finish it however you want for the last session of the paycheck launch, I guess is the best way to say it. So
Yep.
I'll pass it over to you.
All right. Well, thank you, Brian, and thank you, John, in the background, who was answering questions as well. Thank all of you. You know, it's been a good 90 minutes, and I appreciate you giving me this 90 minutes to introduce you to this method of trading. So I hope you enjoyed it. I hope you got some great pointers, but most importantly, I hope you're putting your confidence in me and your trust to do the options paycheck. I've been teaching this course now for 8 years. I've been trading like this for 15. It really is a good system that works very, very, very well. So get signed up for it. You got a couple more minutes on the $9.95 special. Start the class tomorrow. You won't be disappointed. You've got that money back guarantee to back you up. Put your faith and confidence in us. We will not let you down. All right. With that, I want to wish all of you a very fine evening and a very fine, successful 2024 and beyond. And thanks again, everyone, for attending. Good luck to you in the future. I hope to see you tomorrow at the first session of the Options Paycheck Experience. Good night, everybody.